Hello and welcome to Inderes TV. Tokmanni released its Q4 report a good week ago, and now I'm in the studio with analyst Arttu Heikura to discuss the result. Hello Arttu.
Hello.
Let's start with the main takeaway from the Q4 report. What's your thoughts on that?
The growth was good, pretty strong, especially compared to the market. Revenue grew in both new stores and like-for-like stores, I mean old stores. And what was a bit disappointing was that gross margin came a little bit down. It was due to given discounts, campaigns, but also increased freight costs, which harmed especially Dollarstore's gross margin. But given the growth in like-for-like stores, also the cost level relate to net sales decreased, so there was some kind of scalability in the cost structure. So EBIT increased, but not as fast as revenue.
Okay.
And guidance was, it was in a big picture, it was quite expected, but the midpoint was a little bit lower than the consensus estimate. So after the report, some estimate revisions were made downwards, but it was in a big picture a good quarter, and also dividend was quite in line with the estimates. So.
Okay, so good overall, but there were some deviations from what was expected, and the guidance was a bit soft compared to expectations. Yeah.
But the story is continuing to the right direction. So yeah.
And like we mentioned, the performance in Q4 was good. We can't deny that. But as we can see here, even the share price plummeted right after the result, quite a lot actually, compared to maybe what you'd expect.
Yeah.
In your opinion, what was the reason behind this?
I think it was the guidance, but in general, the share price reactions have been in Tokmanni pretty steep in the past few quarters. So maybe the market was expecting a little bit higher guidance for the current year, but I don't see any major issues regards to coming year, and earnings growth seems continuing.
Yeah, and it seems that now the share price has recovered a bit from the first dip. Then let's move on to Dollarstore. How has the Dollarstore performed now under Tokmanni?
In terms of sales, the development has been quite strong. They have grown in like-for-like, both customer visits and average basket sizes has grown, which is of course a good thing.
Yeah.
And the performance, especially in the H2, was better than the market. So I think it has been a good development. Maybe the EBIT improvement hasn't been that good as we expected like a year ago, but there are some things to do with the integration and getting the synergies within the group. So the performance has been quite good, but of course it could have been even stronger. But we still believe that Dollarstore has a big potential to improve its margins and to drive the Tokmanni's growth in the future.
Yeah. So we still consider it a good purchase.
Yeah.
When it was made.
There will be many more new stores in Sweden and Denmark, and also we believe that it has room for scalability in terms of EBIT margin. So we'll see that how the things go forward. But yeah.
And you mentioned the synergies. What do you expect on that front?
Tokmanni said that approximately 13 to 14 million has been realized in the synergies, and they believe that there is much more synergies to get. Of course, it's somewhat hard to model the impact of synergies because of there are also other factors that impact the overall profitability. So the direction is right, but we'll see that how big the impact is on the, for example, gross margin and so on. With the Tokmanni's private label products are coming into Dollarstore stores, there is potential, and also with by combining the sourcing within the group, there is some potential still, given that Tokmanni is trying to increase the private labels in Dollarstore stores. So yeah.
Okay, so
that should improve the profitability also.
Yeah, so there should be some improvement on that front as well. What about the SPAR collaboration in Finland? We've already said that it should bring some positive development for the company, but what's your expectations on that front now?
Yeah, we can divide it into 3 categories. So first step is to bring SPAR products to all of Finnish stores, Tokmanni stores. They are heavily focused on groceries, so not durable products, just groceries. Where Tokmanni's competitive position hasn't been that good compared to other big players in the grocery segment. So that should give Tokmanni some kind of purchasing power to get right prices and be able to provide also low prices in the grocery segment. So first step is to increase the SPAR or bring the SPAR products to existing Tokmanni stores. The second step is to convert existing fresh food stores to the SPAR brand. So Tokmanni currently has some 20 fresh fruit stores inside Finland, and now within next few years they are converting those departments to SPAR stores. So there is I believe that it has potential to increase the customer visits. And at the same time, when Tokmanni has the durable products within the same store, so it has also potential to improve the sales in durables, because that should also improve the EBIT from that store, because those durable products are much more profitable compared to the grocery business. And we'll see in which time range does this happen, but in coming years there should be 20 SPAR stores in Finland, and at least 20.
Yeah.
And the third step is or Tokmanni is evaluating whether they should ground new standalone SPAR stores. So there wouldn't be any Tokmanni related products within those stores. So only SPAR stores, grocery stores. And this is something that we are not so sure about the value creation of this type of movement, because for example, Tokmanni has to acquire new retailers to manage those stores.
Yeah.
So there is one how do I say cost line to the equation, and also how competitive those standalone stores are compared to the strong players in Finland, such as S Group or K Group. So but we'll see that whether Tokmanni is to bringing new standalone SPAR stores. So but the first two steps which I mentioned, we see those as a positive factor, given they are increasing or improving Tokmanni's competitive position within the grocery market in Finland. So we are expecting that the movement will bring some growth in Finland, but there is much uncertainty, because we don't know how many fresh food new fresh food stores will become, and how many SPAR products are brought to the existing Tokmanni. So, but in this year or in next year, not that big effect should come that movement, but maybe in like 3 to 5 years there should be some growth opportunities also.
So further down the line, but definitely these two scenarios, the first two, I agree. I see that there's all kinds of potential, because with the existing stores coming, more different and fresh grocery products coming in would probably maybe bring in new customers as well.
Yeah. And SPAR has the SPAR International Group. They have the expertise from the managing the grocery side. Well, when Tokmanni is good at the durable side, so they are kind of combining the forces.
Yeah,
and
two
then,
expertise. Fields.
So
and then that third option, that was news to me. So that sounds quite interesting in the sense that would be something completely different for Tokmanni. And then, as you mentioned, with the grocery store market in Finland being so polarized, it's there might be potential, but it might also be a wrong decision if they go down that road.
Maybe one thing that I should mention is that the Finnish grocery market is controlled largely by two players. So S Group and K Group, their market share is somewhat 80%.
Yeah.
And then there is Lidl, which market share is 10%. So the market is quite centralized to these three players. But at the same time, if Tokmanni is able to acquire new customers with low prices, so there should be some room for gaining market share.
Yeah.
We can see the picture that Tokmanni is able to get some market share within the groceries, but I don't believe that Tokmanni is coming or passing Lidl, for example, but some minor percentage to gain in the market, but not coming as a big player.
No, and looking at the history for Lidl, even how long it took to even reach this market share.
Yes.
Then moving on to Tokmanni's Swedish competitor Rusta, they reported their Q3 24-25 result a few days after Tokmanni's result. How did they perform compared to Tokmanni?
It was good in Sweden, but not that good in, for example, Finland. So in Sweden, they grew much in line with Tokmanni, Dollarstore, and like-for-like growth was some 6 to 7%, if I recall correctly. But in Finland, the growth wasn't that good. I think it was like flat year on year in like-for-like terms. And they saw that consumer sentiment isn't much improved within that quarter. But as in Sweden, the consumer is much better. Consumers' sentiment is much better, and it was seen as a increased average basket size. So customer visits increased, and also the basket increased. So revenue increase was quite good, in line with Tokmanni. But when we think about the Finnish market, I think that Tokmanni performed a little bit better than Rusta. Yeah.
So in Sweden they are performing quite similarly at the moment, but in Finland Tokmanni was stronger than Rusta.
There could be the reason why Tokmanni's H2 in Finland has been that good is because of the H1 they have some difficulties. Tokmanni had some difficulties in H1, and in the Q3 report, Tokmanni said that it will kind of give more focus on the prices and the customer, and likely they have continued or increased the campaigns and little bit more discounts. So that could be one factor that is has been good for Tokmanni and not that good to Rusta.
Yeah. And it seems the big difference is also in the average purchases, that in Finland they have been lower than in Sweden.
Yeah, definitely.
Based on the consumer confidence as well. Or...
There is a trend that the consuming is focusing on the daily items, which has much lower price points compared to the durable products. So durable products has been like decreasing for 1.5-2 years in the market, and it has been seen in the good growth in the grocery products. So that is one factor which is kind of supporting the growth, but then it kind of lowers the average basket size because of the lower price point.
Of course, yeah. Then if we discussed the guidance already, but what are your expectations for this year for Tokmanni?
Yeah, in Sweden and Denmark there will be like 15 new stores, so that is supporting Dollarstore quite much. But we are also expecting that the good market development in Sweden is also supporting Dollarstore. So good growth in Sweden and Denmark, and also improving profitability given the like-for-like growth, improving the like-for-like stores, and then brings a little bit scale to the equation. And Finland, we expect somewhat not that big like-for-like growth and few new stores. And what can be improving the like-for-like is the SPAR collaboration because of the big news, and I think consumers can be, enthusiastic to go and see what kind of products SPAR has to offer. But we are not expecting that much improvement in the market sentiment in Finland. Maybe the H2 could be a little bit better, but not huge market growth in Finland. And at the same time, we believe that the margin should improve given the revenue growth and not that much inflation and so on. So we see the current year as a good for Tokmanni.
Okay. And then finally, as always, what about the valuation and recommendation?
Yeah, the Tokmanni share price, the valuation is quite moderate. So the PE multiple for this and the coming years is pretty close to 10, and it's not that high given the expected earning growth. There's also quite good dividend yield, which is above 5%, and our recommendation is accumulate currently.
Yeah. So on the positive side there as well.
Sure.
Yeah. Thank you, Arttu.
Thank you.
And you can find out more at inderes.se.